American credit card debt. It has now surpassed $1 trillion. That's with a T. That is the highest it's ever been. Experts say money is stretched thin due to inflation, high housing costs, and other expenses, causing folks to owe more money than ever before. Well, while we can't give you any money right now, we can help you manage what you already have. Janae Adams with Debt Sucks University and Nathan Grant with MoneyTips.com are here to talk spending and here to talk saving. That's right. So what we want you to do is text your financial questions to the number that is on the screen. That's 336-379-5775. You're seeing it there in the corner. I have to tell you that when you text in your question, absolutely anonymous, no one knows who's asking what, but you do get your question answered live and on the spot. All right, let's start with the whole credit card debt and this $1 trillion record thing. Nathan, what can people do if they have this kind of credit card debt?
Yeah, so obviously, like, we're coming up into the holidays and stuff, so people are probably going to be more likely to lean towards things like that. So the best thing you can do is start over with a new budget and figure out where you can cut money out of certain areas, whether it's subscription services you're not using, or maybe you're ordering a lot of food delivery that's unnecessary. That extra money can go right into your savings, right into paying off your debt. So that way, if something does come up along the way of paying off your debt, you have a little money to work from, then you're not just turning right back to the credit cards that you spent so much of your time trying to pay off and get out of that debt.
Right, and I know a lot of people at home will be like, yeah, that's easy to hear him say it. Now, Janae, you actually lived it. You paid down, what, something $50,000 in debt, is that correct?
That is correct. Yes.
Okay, so when people are like, all right, she's actually done it, what are some, I know you did it like really like major. How can we do it on a smaller scale, especially as we're leading up to Christmas?
Yeah, so Christmas is coming up, which means you're probably going to buy some more things. So this is the perfect time to get rid of some things that you already have and make some money. So those clothes that are summer clothes that you know that are not going to fit the next year, this is the time to start selling them, whether it's at a thrift shop or maybe to friends who really like them, and make you some money and maybe use that money for Christmas shopping.
Okay, that's not a bad idea for sure. A lot of people are going to the whole 0% credit card thing because they want to maybe transfer a balance. They want to consolidate that. Nathan, what kinds of things do we need to know when it comes to transferring something to a 0% card?
So just like any other credit card, a balance transfer credit card requires you to apply and get approved. So you got to keep that in mind, that it's not just going to be a solution that you apply and you're guaranteed to get it, and also the amount that you're approved for. But even if you do get approved for an amount that might be less than the overall debt that you're trying to pay off, moving a portion of that to a 0% interest card could help you save money in the end just because of that lower interest. But there are other options too. Personal loans have lower interest rates on average than credit cards, so even using a personal loan to consolidate some debt might be able to save you some money.
Yeah, and with those 0% credit card offers, you can't miss a payment.
Yeah, especially if you a lot of times you'll see in the fine print, which is easy to skip over a lot of times when you're applying for credit cards, but the fine print, you can know all the details about what kinds of fees are going to come after you if you don't pay on time. And then some of them, look for things that say deferred interest, because that sounds good, but if you don't pay off the balance that you put on there when you transferred it in the beginning, at the end of that deferment period, you're going to get charged interest on that whole balance at the end. So you want to make sure that you plan it out on your calendar. I pay this much each month in that window of time until I have it all paid off, then I can avoid all that stress.
Yeah, don't we love that little itty bitty fine print? All right, I got one more debt kind of consolidation question, Janae. A lot of people will say, well, I'm getting like calls or emails or texts from people saying that they can help me consolidate my debt. Should I do that?
More than likely, no. If someone's calling you, they are going to find a way to make you pay for that. And a lot of times they'll end up destroying your credit for that consolidation because they won't pay for anything until the people actually agree to bring basically the fee down and so forth. So if I were you, I would try to work on my own to get that stuff paid down instead of consolidating it.
Okay. All right, so we already have a few questions, one of which is, let's see, this is about, should I use a credit card to pay off my school loans? Janae?
Yikes. No, absolutely not, because you're just basically transferring one debt to another debt that actually will not have any protections from federal student loans. So whenever you consolidate or into private student loans, which are federal loans, you lose protections. If you try to pay it off with a home equity loan and transfer it that way, you lose protections. You never want to lose the protections of the federal student government aid that you already have, those student loans, because you wouldn't be available for the SAVE program or any other kind of income-driven repayment program. That's definitely not a good idea to put that towards a credit card.
All right, and since we're on the subject of student loans, the student loan repayments, they begin October the 1st. People are thinking to themselves, well, the government may shut down October the 1st. Maybe I'm off the hook once again.
Absolutely not. The people who are dealing with your student loan payments are third-party companies. So it's not the government. The government has hired third-party student loan companies to handle those student loan payments, and they're going to be open, and they're going to be waiting for your payment to come in.
Okay. Hey, Nathan, we've got a credit card question about, I have a high interest credit card. Should I focus on that card fully and just do the minimum payments on my others till I pay it off and then move on to the next one?
Yep, what they just described is the Avalanche Method, and it's not the only way you can pay off debt, but it is the way that will save you the most money overall. You're not going to see as much of the quick wins with the Avalanche Method, but just like they said, you pay at least the minimum amount due on every other debt, but you put any little extra dollar you can squeeze out of your paychecks into that highest interest debt. And then once that's paid off, you move on to the next highest interest debt. So what you're doing is really targeting that high interest, which is the most damaging thing about credit card debt that you carry month to month, is that interest rate. So if you focus on the one with the highest interest rate, even if, maybe I could pay off this one that has a smaller balance sooner, but if the interest on that one is just sitting there while you're only paying the minimum on it, that's going to damage you the most over the long run.
All right, and real quickly, because you mentioned it, you said Avalanche is one method, Snowball is what the other one is called. So explain what that one is.
Well, I kind of touched on it a little bit when I said the smallest balance. Basically, what you would do is focus on the one that has the smallest balance and pay that first. So that way you have that one out of the way, and whatever money you were putting towards that one goes towards the next smallest balance, until you get to the whole debt being paid off. But the thing about that is, again, you're not focusing on the high interest. So if one of those ones that you're only putting the minimum on each month has a extremely high interest rate compared to the one you were paying, it might be better, if you want to save the most money in the long run, to focus on that other one.
All right. Hey, Janae, I know you are very conscious about what's going on inflation-wise, and so there's a lot of things that we can't, help, right, with the food prices and that kind of stuff. So with that, how can people save money on those kinds of items that they need anyway, even with the inflation?
Yeah, so inflation has gone down from 9% to 3%, but of course you still have some sticker shock in the grocery stores. If I were you, I would plan out my meals according to what's on sale and go that way. So even if you have to go to the grocery store, each week, plan your meals towards that way so that you can save money. If bacon costs too much this week, or a hamburger, then let's look at chicken. Let's look at just the eggs and make a meals out of that.
Gotcha. And have that meal plan and stick to it so you're not spending extra money when you're out and about. All right, we're going to take a quick break. We're going to be back with more of your questions coming up next.